Hello again and welcome back to London. Many analysts are pointing to an oversupply in the oil market. So why is the price of the black stuff staying around $65 a barrel? That's why I've been to IG to speak to Joshua Mahony. Josh, there's many things I don't understand, but I really don't understand why the oil price at the moment seems relatively well supported, because everyone keeps saying there's a lot of demand, there's a lot of supply out there, not a lot of demand. So why is it remaining kind of stubbornly high?
Oil price at the moment I think is particularly interesting, most notably because of the fact that you've got almost like two forces in play. But you know, when prices go up, essentially you've got a load of people that essentially are going to enter the market. You've got all of the shale gas producers over in the US that are likely to start, turning the pumps back on, essentially. You've also got massive stockpiles in terms of the US. We've got, I think it's 240 million barrels over in the US currently in stockpiles. We've also got China that's building up stockpiles. So anytime the price goes low, they build up stockpiles. So we do have a huge amount of supply that can go onto the market, and that means that we should be seeing further downside in terms of price. But on the flip side, you've essentially got that in terms of as soon as prices go low, you see consumers start using more. I mean, recently we saw in terms of the First Group results, they said that their Greyhound business over in the US is suffering because people are actually starting to substitute the use of buses to actually start driving everywhere, because obviously now, long distances in particular, which are seen over in the US, now become very affordable when you see a significant downside in terms of oil price. So you do have that demand that's likely to pick up as soon as you actually see significant movement to the downside. Again, same kind of thing with China. China is actually taking this opportunity. Whenever it starts coming back down, they're actually trying to stockpile as much as possible. I read recently that essentially they've taken on a load of oil tankers and they've got them floating around the sea, essentially just full of oil, waiting for the moment that prices go up, whether they're going to sell it or whether they're just going to essentially use it at that point and be able to have it at a more affordable price than is on the market. So, I think at the moment you've essentially got, two different forces pushing either way, and that's why we're actually seeing relative stability around about that sort of $65 mark in terms of Brent. But even if we saw some sort of downside, I think it would likely be limited to around about 60 at the moment. In terms of upside, probably around about $70 is where we started to see it turn back towards the downside. So if we started moving back towards 70, then it's likely we'd see people probably come back into the markets, and it makes some of those oil exploration wells and such like actually more economically viable for them to start turning the tap back on, in which case you'd think they'd start coming back again. So
what about the supply issue? It's interesting that IEA has said that oil growth has been strong in the oil industry as we see the shale. We've also got to factor in Iran, don't we? Because we're going to see a lot of oil come online from Iran and Iraq.
Iran's a big one. Iraq's within OPEC, but they're increasing their production. We've just heard today that apparently Saudi Arabia is saying that they're willing to meet any increase in demand by increasing output. We saw the IEA the other day saying that essentially OPEC have got the largest amount of output currently in terms of crude since 2012, August 2012. So we do have a massive amount of supply coming onto the market, but we're coming into US driving season. We're coming into the period of time where, especially in Saudi Arabia, they've got massive demand in terms of energy for powering their air conditioning units. So all of the hot countries around the world, all of a sudden, are going to start turning on their air conditioning, driving around the country for their holidays and like. And that kind of thing is what fuel is used for, essentially. So I think demand does generally go up in the summer months in the same way that we actually see that same kind of increase in demand in the winter when they actually start turning on their heaters. But so I do think demand's going to increase alongside the increase in supply. But the interesting thing is going to be Iran, because we don't necessarily know exactly how much and when it's actually going to start coming onto market.
Yeah, you've also been writing about gold, the gold and silver levels. There's no point trying to pretend that gold is interesting.
Yeah.
But is there a case for a short trade on gold? If we consider that the Fed's going to hike rates shortly, that safe haven trade seems to have disappeared. There seems to be a lot of downward pressure on gold, in theory at least.
In theory, that hasn't necessarily come to fruition. We've seen a lot of just sideways price action, which quite honestly can be quite a good thing for a lot of traders that are out there, because essentially you just get like, this is where you sell, this is where you buy, and it just keeps ranging between the two. We're actually starting to see it come out the bottom side of this sort of 2-month range at the moment. So that shows that there could be a little bit of downside off the back of that. But I think it would be rather limited personally. I think people do like to hold gold within their portfolio. And I've certainly had people that I know saying that they think that gold at the moment is an actual good proposition for a buy bet. They think that down the line it's actually significantly going to improve in terms of price. So I think there are still some buyers in the market as well. So likely we're just going to see a continuation of the sort of sideways price action that we've seen over recent months.
Yeah, let's finish with the perpetual question of Greece. I was speaking to James Hughes, one of your former colleagues.
Yeah.
He was saying he expects Greece to leave the euro next year. What's your take on the situation as we stand?
Ever the sensationalist. I mean, quite honestly, I think Greece is fairly small in terms of the whole group. And the question is, how much do they care about keeping the whole project alive? And I do think there's a significant impetus behind actually keeping it alive and keeping that stability. So I do think they're going to try and do everything they can to try and keep them within the Eurozone. But ultimately, what's actually going to get Greece out of this situation? I don't think necessarily paying their bills tomorrow or paying their bills on the 30th is necessarily going to get them out of the problem that they're in. It's long-term solutions. Whether they can come up with that or not remains to be seen, and possibly one of the solutions would be for them to try and go back to the drachma. So in which case, we could see that down the line, but I think that would be something a measure that's actually taken as almost like a last resort for them to actually try and fix the country after a few more attempts at what they're trying to do at the moment. I do think we're likely to see some sort of deal this month. I know the IMF decided to pack their bags yesterday, and it turned out that they actually were just hiding behind the door to come back in, because apparently now they haven't completely quit in terms of the negotiations. So, we've still got a couple of weeks left. I do think they're going to have the funding to actually pay their bills at the end of the month. But the problem is, you can't just keep living day by day, month by month. Next month we've got significant bills going to the ECB, and then we've got the same kind of thing the month after that. So really, where does it stop? And where, we've actually heard Angela Merkel saying that she doesn't think that a third round of bailouts actually sensible or something that the Germans would actually foresee happening. So they need to find some sort of real solution to the problem, or else possibly we could actually see them down the line leave as a way to actually make them somehow competitive.
Well, thanks to Josh for his insight into a whole range of topics. Stay tuned for more interviews and analysis, but for now, goodbye.